Was today the start of a structural breakdown in the memory trade, or the best buying opportunity the AI bottleneck has ever handed you? I'm Alex Carter. Welcome back to Wealth Signal. Today the Dow was up 0.5%, and the S&P held its ground. But the tech sector told a completely different story. The memory sector, SanDisk, Micron, SK Hynix, Western Digital, and Seagate all sold off hard. And the question every investor in this space needs answered is simple. Is this the beginning of something structural, or the best entry point this bottleneck has offered in weeks? I break down this sector every single day, using the same green, yellow, red framework, so you can see the full picture instead of reacting to one scary headline. If that's been useful to you before, hit like right now and subscribe, because today's breakdown covers a lot of ground. Asian market contagion, a celebrity short position, and next week's make or break earnings. Let's start with the red signal that set the whole day in motion. Contagion from Asia. Overnight, Kioxia dropped 9%, Tokyo Electron fell 5%, and Advantest lost 6%, dragging Japan's Nikkei down close to 3%. South Korea's index fell nearly 6%, hit hardest by its own memory giants. SK Hynix down 11% and Samsung down 8%. That overnight weakness in Asia created a direct pipeline into our own market before the opening bell even rang. Semiconductors make up about a third of the entire tech sector's weight, and that sector fell nearly 3% today, far worse than the broader S&P. This tells us something important. When Samsung and SK Hynix face severe liquidation, U.S. desks de-risk automatically, before American traders even get a chance to react. Here's how that hit our own memory sector directly. SanDisk closed down 11%. Micron dropped 7%. Seagate and Western Digital both fell close to 7%, and SK Hynix's U.S. listing followed the same pattern. And it didn't stop at the close. In after-hours trading, every single one of these names kept bleeding lower. From Micron down another % to Seagate down another $1 and change. Now let's flip to green, because not everyone read today as bad news. Morgan Stanley's Joe Moore came out saying this pullback has created an attractive opportunity, arguing this memory cycle is fundamentally different from prior ones. His view? It's not just data centers driving this anymore. Memory has become the core bottleneck of the entire agentic AI phase, and that structurally changes how this cycle behaves. Morgan Stanley specifically said the memory shortage shows no signs of abating, projecting a 25% quarter-over-quarter increase in pricing. They also pushed back on the idea that a 2027 or 2028 shortage worsening is invalid. Their view is that demand will simply keep outstripping supply. That's a direct counter to today's sell-off narrative, coming from one of the most respected names on the street. The second green signal comes from AMD's Lisa Su, straight out of their Advancing AI event this week. She said the AI boom is entering a new phase, one shaped less by model training and more by inference, AI agents, and physical AI, forcing a major redesign of data centers. She projected the data center CPU market could grow from $26 billion last year to $220 billion by 2030, a tenfold jump in 5 years. Su also said AMD is betting on physical AI beyond the cloud, factories, logistics, healthcare, autonomous mobility, and this week they unveiled new embedded AI products and a robotics platform to go with it. This is exactly the shift I keep talking about on this channel. The market isn't just about data centers anymore, and that shift exponentially increases the demand for memory across every one of these new categories. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. Now for a signal that's green for the sector, but yellow for Micron specifically. Samsung and SK Hynix are meeting with top U.S. tech leaders in Silicon Valley today, and reports suggest massive deals, strategic partnerships, memorandums of understanding, long-term supply agreements could be announced starting today. American tech firms reportedly drive 80 to 90% of South Korea's memory orders right now, which validates that hyperscaler AI demand isn't slowing down. Here's why I still mark it yellow through the Micron lens. When Samsung and SK Hynix move in tandem to lock up multi-billion-dollar allocation deals with top U.S. hyperscalers, it shows Micron's primary rivals aggressively securing partnerships, while Micron ramps its own U.S. HBM production. Big Tech isn't waiting for domestic capacity to catch up. They're securing high-bandwidth memory wherever they can get it, right now. The next yellow signal is a Washington policy fight. Nvidia, Microsoft, Meta, and 20 other tech leaders issued a rare joint letter urging the White House not to enact broader restrictions on open-weight AI models, just days after reports the administration was reviving a push to ban Chinese models. Notably, OpenAI, Anthropic, and Google did not sign it. This matters for memory investors because open-weight models drive AI adoption down to private enterprise servers and edge devices. Heavy-handed regulation could slow that private build-out and directly hit demand for server DRAM and enterprise SSDs. There's also a geopolitical layer specific to Micron. Treasury Secretary Scott Bessent has warned sanctions and entity list designations remain on the table, and memory has historically been a primary battlefield whenever U.S.-China tech tensions escalate. Now, the red flags. First, the options market. Put-to-call ratios across every memory titan closed well above 1 today. Western Digital at 1.79, Seagate at 1.54, SanDisk near 1.37, Micron at 1.23. Expected moves range from 4.3% for Micron up to 12% for SanDisk and Seagate heading into Monday. When institutional desks buy this much downside protection at this scale, it tells you smart money is actively positioning for further weakness. That kind of one-sided put buying also creates a mechanical risk. Dealers who sold those puts are now net short gamma, so any weakness at Monday's open forces them to sell shares to hedge, which can accelerate the move lower. Watch the lower expected range boundaries closely, around 880 for Micron and 748 for Seagate. Because if those levels get tested early, dealer hedging can trigger secondary waves of selling before things stabilize. The last red signal I can't ignore is a celebrity short position. Michael Burry doubled down today, disclosing he sold more short shares of Micron at $933.86 and added to his Nvidia short as well. What should concern us isn't just the entry price. Burry is directly challenging the sustainability of AI chip demand, arguing hyperscaler revenues are increasingly financed through circular, off-balance sheet funding arrangements. If retail momentum funds start front-running Burry's short thesis at Monday's open, it could amplify the dealer hedging pressure we just talked about and test Micron's critical support levels around 900 and 880, right before we head into this make-or-break earnings week. That combination of options positioning and a high-profile bear thesis is exactly why I'm calling this a red signal heading into next week. Quick question before we move to the wrap-up. Are you siding with Michael Burry's bearish thesis here, or with Morgan Stanley's bullish read on this cycle? Drop a comment and tell me where you stand. I read every single one. So here's how today adds up. Green. Agentic AI is confirming the memory wall from two completely independent directions. Morgan Stanley's bullish structural read and AMD's own roadmap toward inference and physical AI. Yellow. Korea's memory giants are locking up deals that validate the sector while adding competitive pressure on Micron specifically, plus a Washington policy fight with real geopolitical retaliation risk attached. and red. Contagion from Asia dragged our entire sector lower before the bell even rang. Options positioning shows smart money bracing for more downside into Monday, and Michael Burry just doubled down on his Micron short with a direct challenge to how hyperscalers are financing this entire build-out. My scorecard on today: 6.9 out of 10. Constructive on the long-term fundamentals, but genuinely defensive on the near-term risk. And that brings us to next week, the most important week this sector has faced in months. Seagate kicks it off Tuesday. Wednesday brings Microsoft, Meta, and ARM. Thursday brings Apple and Amazon. These are the companies behind the $700 billion-plus AI build-out, and every one of them needs to answer the same question. Is hyperscaler CapEx staying wide open, or is it slowing down? If even one of these hyperscalers signals hesitation on AI infrastructure spending, it could trigger a broader valuation re-rating for the entire memory sector. But if they reinforce aggressive spending, and if SK Hynix and Seagate confirm HBM and high-capacity demand remain unconstrained through 2027, it validates the fundamentals and could drive strong upside momentum. This is genuinely a make-or-break week for everyone watching this trade. Imagine being the investor who tracked every one of these signals daily, instead of panic selling on one red day or panic buying on one green headline. That's the difference between reacting to noise and actually understanding the cycle. If that's the kind of investor you want to be, hit subscribe and stay with me through next week's make or break earnings. And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Keep a close eye on Monday's opening bell, given today's options setup. Watch what comes out of the Silicon Valley meetings, and mark Seagate, Microsoft, Meta, Apple, and Amazon's earnings dates on your calendar. This next week decides a lot. And if someone in your life needs to see where this sector stands right now, share this video with them. I'm Alex Carter, and I'll see you in the next one.